Hi guys, hi, Simon McCabe here. Hope you're all well. Just thought I would do a quick recording on the 2nd of April just to update the Bitcoin chart, which I sort of started posting. I don't know now, probably this probably around January time. Really, we were looking at this inverted head and shoulders here. Now, I know a lot of people don't see it that way. Everybody to their own. This is my interpretation. So again, this isn't financial advice. This is just me purely offering what I see, sharing what I see in the market, and if it helps you, great. If it doesn't, on to the next. So but yeah, literally as we moved down here in December, we started to form here the sort of the left shoulder. This is the head here, and then you've got the right shoulder, and yep. So this is the head, the shoulder, the two shoulders, and you've got a line through here, which we were looking to break through. Now, what can happen is when you've got an inverted head and shoulders or a head and shoulders, once you've formed the right shoulder, you can go straight up. But what can often happen also is you can do what's known as a head test. So in fact, you break down to see whether you make new lows, and if you don't make new lows, it can be classed as a failed head test, which is what I was referring to in this box here, which is where typically you would look to see a failed head test. Once the head test fails, what you're looking out for is basically for it to get back above this purple line. And once it breaks above this purple line, the target, you determine the target by looking at the head, so that the apex of the head to the line, which is about there. So that's your target, that's the distance for the target. And what you do is you add that to the breakout point, which is here. So there was my target of 4,800, which happened to sort of coincide really. I was aware that the 200-day moving average was coming down. So I was expecting this the 200 moving average. I was sort of expecting it really probably to get to this point somewhere around here. So we're a little bit more delayed than what I anticipated. Very interesting to note that we hit the 200-day and actually went straight through it, which is an area which we need to analyze in more detail. So I'll look at that again in a minute. But this sort of this inverted head and shoulders has now played out. So that's actually finished with now, and I can get rid of that. So let's just delete this, clear up the chart. There we go. Sorry, take a look at the time. Right. Now, what we've also done is, if we just scroll out a little bit, if I just hide there. If we look at the top here from the 4th of May to the high here on the 24th of July, and we draw a resistance line through there, this was going to be a point here of potential failure. So this was an area that I was watching very closely, which also tied in with the sort of the breakouts for the inverted head and shoulder. Sorry, it wasn't for the inverted head and shoulders. Sorry, that was the resistance line there. So I was watching that point very closely. It could have very easily gone straight down from there, but we broke through there. So that's a very positive sign that we broke through there. And again, as I say, we're now above the 200-day moving average. So if we can actually maintain some momentum above 1618, which is the 200-day moving average, we should then potentially look to move up to 5787 to test the 50-week moving average, which is this orange line here. However, what we need to bear in mind and keep an eye on is various fib levels. Now, let's have a look. The move down started here to the head, there, back up to, sorry, no, not that. Sorry, I wasn't looking at that. Where's the fit? There's the retracement. Sorry, there we go. Fib retracement. What we've done so far is actually we've retraced exactly to this point here, and once it hit the 0.382, which is a fib line, an important fib line to watch out for, it immediately pulled back, and we're currently sitting just below a 50% retrace. Now that in itself needs to be monitored very carefully, because if we do break down from below if we don't maintain above the 200-day moving average, you know, the target on that is actually down at 1157. Now, you know, I'm not saying at all that that's what we're going to do and that we're targeting 1157. However, you know, you just have to bear in mind that that is a retrace. It's hit it so perfectly well there, and we've come exactly to the 50% retrace here. But it's just something that you need to have in the back of your mind if we do start breaking down. You know, although if we do from here, you know, I'm looking really at this 200-day moving average to see if we can stay above it. Even if we do break down, you know, there's quite a lot of areas. I mean, this line here is a strong resistance line, which can also act as support. So, you know, if we do start to break down, you know, we could catch around here and back up. But initially, I'm just keeping an eye on the 200-day moving average. See whether we can settle above that for a few days. If we can settle above that for a few days, then I'm looking at the 5787 as a potential target. Hope that's useful. Any queries, you know, drop a message, an email below, and hope you have a great day. Thank you very much. Bye bye.